Hello trader, welcome to my YouTube channel. My name is Wasq Smart. So in today's video, we'll be talking about um, everything you need to know about fair value gap. So this will be the conclusion episode of our principles of fair value gap. So this is the episode 10. So from episode 1 to this certain episode, we have talked about a lot of strategy whereby you can use fair value gap as an entry. We have talked about a lot of it talks about, I think it was theory. Yeah, we talked about theory footstep where market maker uses um fair value gap as an entry to deliver their price. So but today we just I'll be making a conclusion on these old principles, and I'll be showing you some things that work on the we have talked about it before. We talked about some of them in a single episode whereby I talked about it, I explained it. But today I will just be looking everything all around, and we can look at how market delivered price last week. I'm more of an intraday trader, so I would like us to look more on the intradays and just look at how things have been delivered. Though there are um a lot of movements on the higher time frame. Okay, maybe we should start from, okay, maybe before I end this video, I'm going to show you on daily chart where I make use of fair value gap and it works. So, but let's begin this way. I want to show you um the two major market maker footstep on fair value gap that I really feel like if you study it personally yourself, you can see an edge in it. You can come up with believing it, and you can come up having it as your own personal strategy. Okay, the first one is, I can just draw things out here. Okay, let's start with this. So the first one is, if market enters into if a fair value gap here, not just a POI. Market enter into a fair value gap here. So I don't want to just say POI. I want to mention the exact POI, point of interest. So market enter into a fair value gap, and you have to understand something. You have to have this mindset on something. The mindset is that whenever you are trading an intraday um strategy, or whether you are trading on the intraday, there is nothing like the bias is buy or sell. Okay, this is a get me right. I don't say you should not go. Sometimes we go to daily chart and we were like, okay, market is going to buy, and we come to intraday trying to look for only buys. One thing ICT usually say or always says is that on every day there is buyers and there is sellers. It's going to buy and it's going to sell. But where it's going to buy more is where the higher time frame tells us. But you have to put the mindset that it's not that it's going to be a buyer because higher time frame says buyer. It's going to be a full-time buyer. There will still be a selling opportunity for sellers on that same particular day. But how the market closed is what determines the bias of that whole day. That's why you say, okay, our market order flow is bullish because it closes bullish. So you have to understand that you can have our London section to sell, then our New York section can buy. So you have to understand that they are both buyers and sellers in intraday trading. So don't put all your focus on, okay, I want to be a buyer, I want to be a seller. Though it's fine. But if you want to trade on the intraday, you want to trade on the lower time frame, whenever you see your pattern works, whenever you see your pattern shows up, one thing you just have to understand is where is the market going to. So before I enter that trade, you have to know where market is going to. That's why sometimes if you are following me up for a very long time, you see that on every intraday analysis I did, I usually put Asian buy side and the Asian sell side liquidity. So I'm expecting market to take out the two liquidity. So which means that there will be a sell, there will be a buy on that same particular day. So that's intraday for you. So this strategy now, one of the benefits of the intraday is just that if you know your patterns where you know your strategy where you don't need to like go to that time frame. Just focus on that time frame and try to see if you can see it. But it's very hard and it can take a lot of your money. But that's why I usually trade institutionally. Go to that time frame. That's just you have to put a top-down analysis down to lower time frame, then you can trade. That's just one of the ways also. But one thing you have to understand about the intraday analysis is that, or the intraday trading is that both buyers and sellers are in the market for every day. You can buy and you can sell. You have to understand that. Okay, this strategy now, market enter into a fair value gap and become a buyer. So how this strategy work is that the moment I saw this, I knew that market respected that zone, right? Then the moment market comes back to break this low, breaking the low with mostly like for it to be a strong strategy, it needs to break it with a body. So breaking the low with a body shows me that okay, market disrespected the zone they once reacted from. Then if market create a new fair value gap, then I'll be a seller from here. And I'll expect market to enter here and be a seller. Then because it is intraday, that is why I usually tell people, always tell people to use 1 to 2 risk reward ratio. 1 to 2, or you can find where there's an internal liquidity. You have to understand all this internal and external liquidity. Not every time you are going to target an external. Market may not be trading in that kind of movement. So if you target an internal liquidity, you are still on the point. So you have to target an internal. If you know that the higher time frame is telling you the market is going to be bullish and you saw this on your lower time frame, you can still enter it, but you target an internal liquidity zone. Okay, this is number one. So number two of our strategy is just the normal one we know. Whereby we say market took out liquidity, market break the structure with expansion, the market will chase back to a fair value gap, then the market sells. So this is a fair value gap here. So one thing you have to know about these two strategies that don't forget one of them, the first one is that market is bullish. We are having market bullish from start. So market is bullish. The market wants to end their bullishness. They want to end their bullishness. The second one is that market is actually bearish. Market is actually bullish. Sorry, market is bullish, and they want to end their bullishness and start becoming a bearish. So it's still the same thing of the same market maker footstep. But one of the things you have to understand that this one reacted in a fair value gap. That's just the mindset behind it. But this one is actually real. This one is actually, they are both saying the same thing. But the mindset behind it is that market once reacted in a fair value gap, then it breaks it. So if you're looking at the real chart, this is actually I won't lie for you this way. You may not see it in all this. It may not be this way. It may not be clear like this. Though sometimes it comes clear, but it may not be clear like this. So you have to understand how you can be able to see. That is why I love seeing something like this more than this. I love seeing this than this because this one will give me more textual knowledge of what happens in all this time zone and all of that. So that's just what I'm talking about. So that's what we are talking about here. So let's go into the charts and see if you can see it. And that is all. Okay, let me clean out all this. Okay, this is the gold here. So we are I will show you on Wednesday. On Wednesday, that's 9th of October 2024. That's just this week this week trade, right? So this is Wednesday starting from here and closing here. This is 5 minute chart. Most time, one of the important thing you have to know is that 15 minute chart is actually like a higher time frame for intraday. 15 minute chart. Some people say it is 4 hours. No, no, no. So if you enter 4 hours, 1 hour, all those like you are trading a top down. But if you want to like focus yourself on higher time, a lower time frame, just intraday, 15 minutes, 5 minutes, and 3 minutes. Some people enter 1 minute, but I can't trade on 1 minute. I don't know how to. So this is 5 minutes. I'm just starting from 5 because everything was clear on 5 minutes actually. So first thing I do when I comes into the chart, I demarcate the opens of the chart. Open market opens there. That's New York open. So I'm having my open first. I'm having my London. Okay, I don't need to. Let me put my London open. That's London Q zone open. That's 2 a.m. So London open. Yeah, let me put my New York close. So I just want to trade in that time frame and see what happens in that whole New York close. So this is the whole time I want to trade. But on my normal day trade, I usually demarcate my London close and my New York open and my New York close. Just that little time frame I want to see market trading. But because of this video, I just want to like show you all the time frames so I can understand that this is the most logical time you have to trade in the market or good. Look for your strategy in this time. Don't go out of this time. Look for your whole strategy in this time, and that's all. Okay, we see markets. Okay, you see market opens here and market was bullish. Why? Because I see markets broke the structure here. Structure was broken. One. So number two is that market reacted. Market reacted to this fair value gap. Yeah, there's a reaction to this fair value gap. So I was expecting market to take out this low and continue the bearishness. But what did market did? Market took out this high. Market took out this high. Then for my explanation I did the other time is that market enter into a fair value gap, right? Okay, let me do it on bearish so that you can understand. Market enter into a fair value gap, then market reacted for me, the market breaks it, then look for a fair value gap and be a buyer. So that's the same thing here. So when market breaks this high that reacted in this fair value gap, okay, I was looking for a new fair value gap, then I saw this fair value gap, here. So market reacted from this, then I saw this. Okay, so I can enter from the middle of the fair value gap. Yeah, it's actually logic. My stop loss below there or below here, but let's put it here and take profit. 122, right? Just 122. And what I talks about internal liquidity is that if you look at this whole price range, this is external. This high here is external. The internal here is that look for any high. This is internal one. Liquidity, then we have a high that is inside the range. Number two is this here and the fair value gap also that is there. So those are the places you can put your focus. Don't put your focus here. This is an intraday chart. This is an intraday. You do not have any knowledge about what happens on higher time frame. So you have to target internal range to an internal range. You are taking your entry from an internal to an internal. If it is higher time frame, you will take your entry from an internal to an external. It's supposed to be here if I know what happens on higher time frame. But because I am trading on internal, then I have to lower it here, or even supposed to put it inside this fair value gap that is here. Those are the internal PDRAs. But because of my because of my risk reward ratio, then put it there, then see what market do. I have a few times take profit hit. Okay, let's look at another one here. Okay, we have market was bullish. Market was bullish here, so I was like, okay, fine. Market was doing bullish. Then market reacted. Market reacted from this fair value gap here. So you can see this whole reaction. You can see this whole reaction from this middle of the fair value gap. The market traded high. Then I was expecting market to take out this liquidity, which market did not do. Market did not do. The market come back here to break this low. You see that we see the same strategy in one day, two strategy in one, the same. It appears two times in one day. This was for bullish, which was like, okay, market enter a fair value gap, then market reacted, then you see market breaks it, then look for a fair value gap, then and be a seller. That is for year. The same pattern, the same strategy, the same market maker footstep. Then look for the fair value gap to be, then that is it. That is the whole trade you are looking out for. That is the whole trade. This is just on intraday. This is on intraday. Put your stop loss above here. Then look for 1 to 2, or look for the internal range. Where is the external? This is the external here. We have the external here. This is the external liquidity. We have internal here. This is an internal, and this also is an internal. So I have internal. Then either you put your take profit here, or you put your take profit here. Those are the internal structures, the internal liquidity that you should be supposed to be looking out for. That is it. That is how everything is being traded. Two trade in one day. That is very very sensitive, right? That's very sensitive. So that's just the way, like, you have to look at the whole trade. You just have to look at the whole trade. I took this on my Telegram channel. Let me show you on my Telegram channel. Where is next day? Okay, always I will show you that this trade is not just that. This is it here. You can see this whole thing. This whole thing here is being traded. I traded it live. I give it out live. This is it here. You can see gold buy limit 261520. You can see it here. I was looking at the fair value gap beginnings, and I made a lot of looking at targeting the external. Market did not get to the external, but market get to the up here where I break even. So this is the old trade here. So, like, I'm just showing you that this thing works. That's just the principle of fair value gap, and this is a very nice time to just tell you guys that, okay, I think I have, okay, this is it. You can see how market was being delivered just by knowing this pattern, just by trading according to this pattern. All this thing is very possible. You can do these things. And I want to comment, give me some comments, show me, write some things to me, like, okay, are you seeing this? Are you able to see these things? Or you want me to discuss more about this thing? Or if you want me to go live then with you guys, just we're going to choose a day and we can go live together. And I want to see a lot of response. Like, if I can see like 100 response, then okay, that can give me an encouragement for me to go live and do these things live. So this is just the way these things works, and I'm just showing you that this thing works very comfortably. So that's just it, and this is the end video to the principle of fair value gap series that we are doing. Thank you very much for following up to this time, for always liking, sharing, and subscribe. So don't forget to share, subscribe, and even comment. Yeah, I'm looking forward to the comments so I can know what to do next. So that, okay, thank you very much. I really appreciate it.